Good everyone, Les here, Chief Analyst of BG Trading Australia, and I hope you are well. Today is 28th of August 2024, and we're going to be analyzing ZIP once again as per the FY24 report that was released yesterday in the market. We're going to be covering the key fundamental metrics that has led to this rally, whether there is more upside for ZIP, whether we should be buying, selling, or holding ZIP as per the current chart formation and the outlook for FY25. Let's have a look. Please remember, this is not a financial advice. It's just us from BG Trading sharing with you how we apply BGS 20 strategy together with our VIP members to chase 20 to 40% profit in small and mid-sized caps, sometimes large caps as well. How we set up targets, stop losses, how we avoid buying stocks at the FOMO area, and much more. We put considerable amount of hours in this analysis, so please subscribe and share this video with someone that you believe would be interested on ZIP. Also, hit the like button. That will help us with algorithms. So now let's dive into one of the stocks that has been incredibly profitable for us. So if you've been following us long enough, since last year, we have been buying ZIP. Our first entry was at 38 cents, and we had a long-term target at 99 cents. We ended up selling around $1.15, but we did a couple of trades in between that as well. We locked in one trade of 40%, another trade of 80%. We also re-entered again at a low $1, and then we sold, and then we re-entered again around $1.50. It's many trades which we have been trying to sense what's happening with the market. Obviously, we don't want to be losing our profits, so that's why we do blocks of tradings together with our VP members. And not to mention a fantastic trades of over 100% back in 2022 and 2023. I wanted to invite you to become a member of our free Facebook community. Just before we start, we had a lot of great quality conversation with our VP members. We talk about stocks that we are trading, potential opportunities of stocks that are trading at technically discounted price and could rally quite substantially, like we did with Appen, we did with Drone Shield, and many other elements within this community. Also, we have an email list. Just direct message us if you want to be part of our mail list. Now let's jump straight into this analysis. So essentially, ZIP is a buy now, pay later company, and I'm going to get in details of what the company really does at this stage. You can see past videos for that. But what I want to look into is the key fundamental metrics for FY24, which shows us a moderate growth but at sustainable pace, which is exactly what has turned ZIP from a very aggressive growth stock into a more sustainable growth company. And I want to remind you that this is one of the most difficult macroeconomic period. The stage which we are into economic cycle with high interest rates is very difficult for companies like ZIP. However, the ZIP continues to increase its revenue, as you can see here in this report, as the group revenue has grew up for 28% year on year. The group cash EBITDA for the business was $69 million, which is up 243% year on year, which last year was negative. The company was burning cash, now has finally become EBITDA profitable, and that has been seen through this last financial year anyway. The revenue margins of 8.7% up. Also, cash gross profit has increased remarkably 52% year on year, which has provided an overview of a very sustainable business compared to what it was at the previous financial year. Unfortunately, the active customers number has decreased slightly, down 2.9 million. So obviously, that is probably to do with high interest rates environment. So it was once interest rates cut happens, then we are expecting active customer to increase back again. One of the key fundamental metrics the market likes for buy now pay later is looking to arrears rate and net bad debt. ZIP has improved once again, as you can see in this chart here. Improved arrears rate and net debt for the full year. Now, the key fundamental metric that I really like is a net profit after tax. For the first time, ZIP has reported a positive net profit after tax of $5.7 million. Still small, but considerable turnaround from the previous year, which ZIP has reported a loss of $329 million. So from a company that loses money into a profitable company, the numbers speak for itself. And I had this analysis available for you if you want. We have the link already available at our Facebook communities. That's why I always suggest you guys to be part of our Facebook community to have access to this full analysis as well. Now let's have a look the outlook. This is where normally the markets wanted to look at. If you are investing into this company or trading, you want to have a positive outlook for FY25. According to the report, we will see a moderate growth outlook for FY25, which I actually like it because it shows that the management is actually focusing to a sustainable growth, not aggressive growth at the cost of shareholders dilution, as we showed over the last few financial years. And that's when we had this huge crash from $14, obviously as effect of interest rates hikes as well. But the stock has reached $14 and went down all the way to 28 cents or something like this, which was a huge crash. And a lot of people got trapped in this, not necessarily because this is not a company's fault. You have to understand what's happening behind the scenes with the fundamentals, and that's why we understand in very deep detail what ZIP does, because ZIP has been a company that we have been trading over and over and over again with our VP members, and we want to make sure we understand at every single level. The revenue outlook shows a moderate revenue margin growth of 8 to 9%, which represents 3.5% year on year if the company achieves what it's been looking at. What is really positive on the outlook for FY25 is the profit margin improvement they are forecasting. ZIP aims to achieve a cash EBITDA margin of 1 to 2% on its transaction value in FY25 compared to 0.7 in FY24. This goal, if achieved, suggests a potential increase in profitability up to 185% year on year. So we have a very positive outlook for FY25 in terms of profit margin improvement. And that is a key fundamental metric for sustainable growth and for earnings per share increase, therefore translated into further upside for the stock. So now let's take a look on the macroeconomic input affecting ZIP. And that's the outlook for this financial year, let's say the next 12 months. Lower borrowing costs. There is an outlook for improving borrowing costs as a result of if Federal Reserve, like Fed, cut interest rates throughout FY25. I want to highlight this. ZIP has rallied 500% on the back of this expectation already, but also, unlike other stocks or other companies, ZIP has also proven to be improving its fundamentals in every single level. And that is extremely important because a combination of this and confirmation of a macroeconomic adjusting to benefit ZIP as a business, that could reflect in further upside for the stock price. Increasing consumer spending as a result of interest rate cut. Okay, now we are into a shrinked environment, but it could increase consumer spending, and that could translate into an increase of higher transaction volumes, and that is a positive for revenue growth for ZIP. Now, one of the risks here from the macroeconomic aspect is potential for high credit risk, which means a lot of people maybe start spending more and then could start defaulting into bad debts and reflecting to increase of arrears as well. We don't know until that happens, but we gotta bear in mind if people go nuts and start spending again using ZIP, then it could reflect in negative credit risk for ZIP over the next 12 months. Improved economic outlook, which is positive if interest rates cut happens. Obviously, could have a recession in before, but remember, I think this recession outlook could have been priced in already back 6 months ago when ZIP was trading at only a few cents, like 30 cents. And then now we are looking at focus into monetary easing with central banks around the world cutting rates ready, and Fed setting up to cut rates in September. Potential inflationary impact. Obviously, if interest rate cut led to inflation pressure, then ZIP could face increased costs. This should be actually a red flag here, such as higher operating expenses. So just gotta be careful. This is actually a red flag here. I have to fix it up. Now, a technical analysis. So as you can see here, ZIP in the past has been behave into a very speculative growth stock with a huge share price swings. But over the last 6 months, ZIP has sort of stabilized its share price movements, and the fluctuation of share price has improved considerably. And therefore, ZIP stock price behavior has become much more predictable and is now falling into a technical analysis modeling, and we can even use support and resistance to predict a new entry, something that we could never really do before. Let's jump straight into our platform and understand what happened. So yesterday, at the release of the report, we quickly looked into the report, and we mentioned to our VP members that we would be increasing our position in ZIP, not buying, but increasing, because we already bought at $1.70 levels, under $1.70 levels. We would be averaging up if ZIP happened to fall around $2 or under, and that was exactly what happened. We bought more at $2. And now is up considerably from yesterday, showing that ZIP's continue its uptrend. So putting on the Heikin-Ash candles, you can see that the green candle is back, and the momentum to the upside continues to be positive. So we still gain momentum to the upside at relatively high volumes, as you can see today. Obviously, we saw before previous financial report release date, the share price is highly manipulated. People take profit as buy before the rumor and sell at the news, which if the news is positive, there is no reason why you should sell. You should actually increase the position, okay? Now the big question is, should we buy, sell or hold? I would not be buying now because ZIP is trading at former levels. We did average up yesterday together with some of our VP members. So essentially, if you are a VIP member of BG Trading, you will be not only on our WhatsApp group, but also you will be part of our VIP Black community, which we provide a constant updates and comprehensive view of the stock, especially when they are reporting. Because I want to highlight this, everyone, once the company releases the report, the immediate per share price reaction doesn't reflect the outlook for the share price. You really gotta go into every single detail of the financial report. And if the financial report is positive, if it's positive, the outlook is positive, then it's most likely the stock will be upgraded and the share price should have a further upside. And that is exactly what we're expecting with ZIP. Would I be buying now? Not. I would not be buying now. There are other stocks offering better value now. However, because we are holding, we're gonna keep holding until target one or long-term target, which is available for our VIP members only. So if you are interested in becoming our VIP member, take a look on our website, our plans at bgtrading.com.au. Don't miss further opportunities. We've been trading quite consistently in this market. A lot of great opportunities out there. Again, we're not going to disclose our long-term targets here, unfortunately, because this is a valuable information that our VP members buy. But one thing we're going to be doing is, at the moment, is we're going to keep holding ZIP for now until ZIP reach our long-term targets. Want to remind you that the latest BGS 20 target at $2.20 has surpassed. Some of our members managed to lock in 28% profit. For us, we're gonna keep chasing further upside on ZIP for now, as macroeconomic outlook will become favorable. The fundamentals are favorable as well, but the technical formation is not favorable to buy, but it's favorable to hold the stock. That brings us to the end of the video. Let us know what you think about this analysis about ZIP. If you have any questions, please put in the comments below. We are having a very busy week because other companies are reporting as well, and we will be covering each one of those stocks here in this channel. So have a patience. I know you guys have been asking us to review many stocks. We're going to get there probably next week, but this week we are focusing to stocks that have been part of BG Trading journey and our VP members, and we're going to be covering one by one. Thank you for watching to the end. I'll see you next video. Bye.